That's right, Bill. Analysts, investors don't seem to think this can break any banks here. Confidence in Netflix's pricing power is driving those Netflix shares up about 5% today. Netflix's most popular standard service will increase $1 to $11 a month, while the premium 4K plan will increase by $2 to $14. The basic plan will remain at $7.99. RBC analyst Mark Mahaney saying the price increase will be a revenue growth catalyst for the company. Our detailed survey work over the years has indicated that content, not price, is the leading churn factor amongst Netflix subscribers. Now, today's stock move higher is in sharp contrast to Netflix's infamous price hike back in July 2011, when it split up the DVD and streaming businesses, jacking up prices 60% for subscribers to both DVDs and streaming. Now, in the quarter following that announcement, the company lost 800,000 subscribers and the stock fell 57%, with a total 71% decline in the 12 months following that price hike. Now, Netflix handled a price hike 2 years ago far more carefully, raising prices by only $1 with extensive warning. CEO Reed Hastings did say that the price hike slowed growth in Q2 of 2016, but the stock has grown dramatically since then. Guys, Netflix certainly seems to have learned its lesson from that 2011 PR disaster, and its exclusive content really does put it in a much stronger position with consumers than 6 years ago. Back over to you.
That's what the market seems to be saying. Julia, thank you very much. So at nearly $11 for a standard subscription now, does Netflix have that pricing power? Let's ask Barton Crockett from FBR Capital Markets, who's our bull on the stock today, and David Traynor from New Constructs, who's much more bearish. So, David, talk a little bit about, whether you think this price increase is a smart move by the company and what the risk is.
I don't think they have a choice. I think when you look back at Netflix's strategy, it's like a shell game. At first it's about subscriber growth, then it's about international subscriber growth, and when that starts going down, well, maybe it's about margins. It's about original content, not about original content. They lost $4 billion in cash flow last year when you really look at the economics. So original content is not a panacea for profits, maybe for a little bit of revenue growth, but I think at the end of the day, this business model is continually boxed in. They're more like a TV network, and if they're valued like a TV network, they should be closer to $50, not where they're trading today.
Barton, you're hardly a screaming bull. I mean, I think you've got a neutral rating on the stock here, but
Correct.
Be that as it may, you're not nearly as bearish as David is. What do you make of this price increase, and what do you think the response from customers will be?
Well, look, I think the price increase is just right on trend with what we were expecting this company to do. By my math, depending on the mix, it'll be about an effective 8% rate hike, slightly less than what RBC was saying. And I had 7% penciled into my model for next year. I think that what's more important for these guys is subscriber growth internationally. That's really what's driving the story, and they're very early in their penetration of those markets. And everything we're seeing is that the consumer likes the service, that these guys are going to continue to have very robust sub growth. And I think that's a formula for the stock to hang on to the big gains that it's had.
David, we do know consumer taste can be fickle, and there's plenty of rivals out there. Everybody from Hulu, which will be $10 a month now, cheaper than Netflix. Amazon, you could call it $8.25, but it's also part of Amazon Prime. So Disney perhaps coming out with its streaming service around $10 a month in the next few years. So is there any evidence that you can see that customers are tuning out Netflix's content offerings, David?
Well, the landscape is a lot more crowded, as you pointed out, Kelly, than it was before, and I think it's going to be increasingly crowded. People are pulling off their Disney and Fox, pulling their content off of Netflix. So that's why I said they're going to be like a TV network. They have to come up with original content, and creating original content is extremely expensive and difficult. And so I think, look, and rising prices does not go hand in hand with subscriber growth, international or domestic, and that's why we've seen the subscriber growth rates decline as well. So, I mean, I don't get it. I don't see how you can justify anything close to this valuation. If they trade like a TV network, and by the way, the TV networks are a lot more profitable. They actually make money. But if you put them at the same enterprise value to revenue ratio, put Netflix at the same enterprise value to revenue ratio as the average of the major networks, it's a $50 stock.
Barton, I'm not trying to ignore you, but David, I have a burning question for you. What would you tell Reed Hastings to do to grow his company, other than what he's already doing? He's going with original content, which got him where he is today, and he's raising prices to raise more money to produce more original content.
I think maybe
what else would you do?
I think he's been a victim of his own success. The stock price valuation has pushed potential partners to leverage what he's done, whether it's CBS or Disney or anyone else, from buying them. They've been too expensive, and now they're left on an island, and I think they're going to die on the island.
Barton, what would you say to that?
Look, I don't think there's anything in the numbers of Netflix that suggests that they're dying. They're valued at a premium to the traditional TV networks because they're growing. That's where viewership is going. They've got more engagement. They've got a global platform. The TV networks are not as global. And investors want that growth. They want that future. I think every investor is looking at the sector and saying, look, in 20 years, our kids are going to be watching on-demand streaming. Netflix is the leader. They're not going to be watching the pay TV bundle like they do today, and that's where the TV networks are on an island. So I think that the stock action's pretty consistent, and I think there's nothing in the numbers that tells me that you're going to reverse that anytime soon.
All right, guys.
I just wonder, this is not,
Yes.
that, we should thank you, Barton Crockett, David Traynor. I wonder to you, Bill.